the fragile macroeconomic conditions and the strong headwinds confronting the economy. In particular, committee considered the implications of the twin deficits of current account and budget deficits, the rise of nationalist sentiments across the West, and implications for national elections in France and Germany, as well as the forthcoming referendum in Italy. Other considerations include the yet-to-be-unveiled long-term uncertainties of Brexit and expectations of significant shifts in U.S. economic policy. Committee reaffirmed the urgency of prioritizing the diversification of the Nigerian economy, given the gloomy protectionist outlook of the global economy. Committee also evaluated the impact of its July and September 2016 actions on macroeconomy, noting that while foreign exchange inflows into the economy had improved significantly in July and August, it declined after the September MPC meeting, leading to rising inflation and increasing negative real interest rates. However, outflows significantly dropped, lending credence to the propriety of the decision of July and September MPC meetings. The MPC reiterated the limitations of monetary policy in reversing the current stagflationary conditions in the economy, which it traced to supply and demand shocks. Members stressed the need for a robust and more keenly coordinated macroeconomic policy framework that will restart output growth, stimulate aggregate demand, and rein in inflation expectations. Consequently, the MPC welcomes efforts at resuscitating planning, noting the progress made in developing the medium-term economic recovery plan. The MPC urged the government to urgently assess the extent of its indebtedness to domestic economic agents and develop a framework for securitizing the debts in order to settle its outstanding domestic contractual obligations, which cut across all sectors of the economy. These accumulated debts have slowed business activities of economic agents, most of whom are indebted to the banking system, thus compromising the integrity of the financial system. It also advised the bank to commit to greater surveillance and deployment of early warning signals in managing the banking system. Overall, members called for an enrichment of fiscal and other sector initiatives and interventions towards resolving the growth challenges in the economy in order to promptly revive confidence in the economy. Available data and forecasts of key economic variables indicate that the outlook for growth and inflation in the medium term continues to be challenging. Growth is expected to remain less robust given the absence of sufficient fiscal space, while the current tight stance of monetary policy and improved agricultural harvest are expected to contain further price increases and moderate price expectations as the trend has already revealed. Decisions. Committee assessed the relevant risks to the global and domestic economy and concluded that the risks to the economy remained highly elevated on two fronts, price and output. However, considering the importance of price stability and being mindful of the limitations of monetary policy in influencing output and employment under the conditions of stagflation, committee decided unanimously in favor of retaining the current stance of monetary policy, thus keeping MPR at 14% alongside all other policy parameters. In summary, all 10 MPC members voted to 1. Retain MPR at 14%, retain CRR at 22.5%, retain liquidity ratio at 30%, retain the asymmetric window at plus 200 and minus 500 basis points around the MPR. I thank you for listening.